Assalamualaikum and hi. So for today's chapter, we will learn about accounting for accounts receivable.
Okay, let's continue from the prior section where we have introduced you about bad debts and also allowance for doubtful debts. So we have two methods, direct write-off methods that um, that make the bad debt expense incur, and also there is the other methods, the allowance method, that causing the account for allowance for doubtful debts occur. So in this section we will try to learn to make adjustment on account receivable for bad debt expense and bad debt recovered. So this is in conjunction with the allowance method that we have learned in the previous section. To recap from the prior section, allowance method is where the business has set aside some percentage in order to set off the probable amount of account receivable that is unable to be settled. Therefore, when the debt is absolutely proven that it will not be settled, it cannot be settled by the receivable, then although the reminders have been sent to them frequently or several number of times, the amount that cannot be recovered from them is known as bad debts, and they therefore must be deducted from the account. Okay, since estimation has been made previously, bad debts written off will be deducted from the allowance for doubtful debts account. This is in contrast with the bad debts or with the direct write-off methods, where the bad debts is simply taken off from the account receivable. But for allowance method, the bad debt written off will be deducted from the allowance for doubtful debt account. This example, Baba and Chen owe 400 and 600 respectively, and both of them failed to settle the debt. And then the sole trader decided to write off the whole amount as bad debt on 31st December 20x2. So the balance of allowance for doubtful debts at 1st January was 1,200. So how we want to record this transaction is to first to record the bad debts written off from account receivable with debit allowance for doubtful debts 1,000, which is 400 from Baba plus 600 from Chan. Debt. So it is categorized as bad debt recovered. Bad debt recovered are considered as income to the business and will be credited to the statement of profit or loss as other income. This is the step-by-step journal entry on how you want to record a bad debt recovered. First, you have to record the recovery of the bad debt by debiting back the account receivable. For example, here Ali 300, and then you have to credit the bad debt recovered. Noted that the credit account, the credit balance account, will be transferred to the statement of profit or loss as the other income. And then to record the payment made by the account receivable, as usual, you have to debit bank or cash and then credit account receivable. In this example, ABC Trading started business on 1st January 20XO, The accounting period ends 31st December each year. Stated below are the account receivable and percentage of allowance for doubtful debt at the end of each accounting period for the first 3 years. So ABC Trading have decided that the allowance for doubtful debt for each year is 1%. So in the first year, there is no bad debt written off, whereas in 20x1 and 20x2, there is bad debt written off of 400 and 100 respectively. So how we want to calculate the balance CD of the allowance for doubtful debts account? So we have to take 30,000 first for 20XO, the account receivable at the end of the accounting period, times 1%, simply because there is no bad debt written off. So we can get 300 for the balance CD. And then for 20X1, the account receivable is 40,000. We have to first deduct the bad debt written off from the account receivable, and then we times the 1% allowance for doubtful debts percentage. So we get 396. And then for 20x2, as usual, we take end, the ending balance for account receivable 50,000 minus by 100 bad debt written off times 1%, and we can get 149. The first year is the journal entry is just straightforward. We have to record the increase in doubtful debt estimation by debit the doubtful debts 300 and credit allowance for doubtful debt 300, and then we transfer the doubtful debts to statement of profit or loss, and then the allowance for doubtful debt will be the in contra account to the account receivable is statement of financial position. This is how the doubtful debt account and the allowance for doubtful debt account should look like. For the first year, it is simply just 30,000 times 1%. So the doubtful debts should be 300 and then goes to balance CD. So the opening balance BD for the next year should be 300, and then as per calculated there is a write-off or bad debt written off for 20x1, so by 400, and then the balance CD after calculation for allowance for doubtful debt of 1% should be 396. So doubtful debts account is 400 is the balancing figure. 400 plus 396 equal to 796. So minus the 300 balance BD, we can get the doubtful debts figure of 496. And then we transfer the balance CD into balance BD for the next year, 396. And then we have the bad debt written off of 100. And then we have calculated that the balance CD for 1% allowance for doubtful debts for 20x2 should be 149, as we calculated in the prior slides. So the balancing figure for doubtful debts is 147. Noted that the balancing figure, the doubtful debts position is for the 20x2 is in the in the credit side, whereas for 20x1 is in the debit side. Sorry, noted that the doubtful debts figure in 20x2 is in the debit side, whereas for 20x1 and also 20xO is in the credit side. Therefore, the credit side, this will be the expenses, and for 20x2 it will be treated as other income. In 20XO, the doubtful debts expense should be recorded in the statement of profit or loss, whereas the allowance for doubtful debts, balance CD, should be recorded as the in contra account for account receivable in the statement of financial position. This is the journal entry for 20X1. Okay, first you have to write off the bad debts by debiting the allowance for doubtful debts 400 and then credit account receivable 400. This is the portion that is proven to be that the account receivable is unable to pay the debt, so it has to be written off by 400. And then we have to record the increase in doubtful debt estimation by 496 as calculated in the T account of allowance for doubtful debts. And then we have to transfer the doubtful debts amount to the statement of profit or loss in the debit side of statement of profit or loss, meaning that it will be treated as other expenses. So how do we get the 496? You can refer back to the calculation in allowance for doubtful debts account for 20X1. We start with the balance BD from the prior year, 300, and then we take into account the bad debts written off of 400 ringgit, and then we calculated the balance CD of 1% allowance for doubtful debts for 20X1, which is 396, and then we can get the figure of doubtful debts 496. Therefore, the doubtful debts will be treated as an expenses 496 in the statement of profit or loss, and then the balance CD 396 will be treated as an in contra account in the statement of financial position to be deducted from account receivable 40,000. Finally, this is the journal entry for 20X2. In 20X2, we have to first write off the doubtful debts as per mentioned, 100 ringgit by debiting allowance for doubtful debts and credit account receivable. And then we have to record the decrease in doubtful debt estimation by 147. How we get this 147? This will be portrayed in the next slide. And then after that, we will transfer the amount of doubtful debt to statement of profit or loss. But this time, we will crediting the statement of profit or loss, which means it is not an expenses, but it will be treated as other income. Okay, noted here in the calculation of allowance for doubtful debt, we will start with the balance BD from the last year, which is 396 from 20X1, and then we have a bad debt written off of 100 ringgit, and then after calculation of balance CD from the percentage of 1% of an account receivable balance after deducting the bad debt written off 100, it will get 149, and then as the balancing figure, it is 147 to be transferred to doubtful debts account. But this one is the debit balance, so it will be transferred to the doubtful debts account here as credit allowance for doubtful debts of 147 in the doubtful debts account. In this module, you've learned about the account receivable, and there is two methods for treatment of account receivable. First, it's the direct write-off methods, which simply deducted as a bad debt expenses for those accounts that cannot be settled. And the second method is the allowance method, in order to not to overstate the asset of a business. Therefore, some portion, some percentage is being treated as allowance for doubtful debts each year in order to not overstate the asset or the account receivable to be exact. Therefore, in the allowance method, there is some treatment and adjustment on how you want to open the allowance for doubtful debts account, and then the treatment for bad debts written off, also the treatment for bad debts recovered. So that's all from me. I'm Dr. Amira. Thank you so much for listening.